There has been a rash of some big name stocks hitting 52-week lows. Some of these are controversial, some that you may not have even known were at 52-week lows given how much hype they've received around them and how absolutely crazy rich they've been trading over the past few years. But this list looks very different than it normally does, and there's a lot of lessons to be gleaned from it. So let's talk about that today, see if there's opportunity or if this is just a disaster waiting to happen. And guess what, guys? We got both on this list, so you absolutely want to hear. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. All right, so just to be clear, I personally don't care about 52-week highs or 52-week lows in a stock. It can be a starting point to get you some interest, but anything beyond that doesn't freaking matter, and it's simply because of this one reason right here. A stock can be at a 52-week low, and it is still overvalued. That's the truth of the matter. So 52-week low tells me nothing. I want to know the valuation. There's been plenty of stocks that were at 52-week lows and they were still insanely overvalued and had a lot more to fall before I ever bought it. And same exact thing. Stock being at a 52-week high can still be significantly undervalued as well. We saw that repeatedly in the past, really in the past couple of years. We saw that over and over and over again. Stocks making a new 52-week high. Hey, it looks like time to take some profits. Time to get out of stock. Well, you were really dumb if you did that because you missed out on a further 5x or even 10x in some of the stocks if you had that mentality. So that's why I don't really care about any of that beyond just maybe tipping me off to, hey, the stock maybe I should look at. Anything beyond that, it doesn't mean a whole lot. You have to look individually at these stocks and make sure you're doing a valuation, make sure you understand valuation, set your price target, and then execute from there. And yes, I did extend the sale till this weekend for July 4th for my group, where you get to keep that price for life. As long as you stay a member, you get to keep that price, where we discuss exactly how to do evaluation, price targets. You can see my complete watch list with price targets on my buy and sell alerts. We got free courses, free coaching, so much. We'll talk more about it at the end. It's the pinned comment down there. But let's get into the list here and see exactly what's at a 52-week low and see if there's any opportunity there or not. So stock number one is Procter & Gamble. Boy, here's somebody right here that pretty much touches everything that we touch in life. It seems like, at least, you see that logo everywhere if you're paying attention, especially when you're kind of walking down the aisle there at Walmart, Target, whatever the case is, where all the, consumer staples are and everything else of that nature. They are one of the big brands out there, and they're trading at a 52-week low. And it's not really because of anything crazy or anything else of that nature. It's just part of what's going on right now across the board with these style stocks. Pays a great dividend. I don't really see any issues there. Valuation is really where you want to focus on there. Make sure you're okay with that. Make sure you understand that it is a dividend stock. You're not going to get massive price appreciation. This isn't a stock like Palantir, Tesla, or SoFi, or one of those where if they happen to be in a situation where they're extremely undervalued, they might very well rocket ship back up and make a lot of money quickly. It's not really this style stock. It's not really what the style stock is. However, if you're looking to build out a dividend portfolio or something like that, it's definitely worth considering, seeing exactly what's going on and understanding what management's saying, more importantly, on those earnings calls, and then moving forward with it. Make sure you always align your goals with the stock and then with your plan itself. And if this one happens to align to your goal, it might very well be worth looking at. So stock number two is Mullen Auto. All right, what do you know? It seems like it's always making a new 52-week low. It is just how it works with this particular stock. I don't understand the hype that came behind it. Hopefully everybody out there is learning a lesson. I'm sure somebody will create an X account and try to become the Mullen Bull or something of that nature and try to pump it up to the moon. And, anytime the traders get in there and trade up a penny stock like this, then all of a sudden they'll say, see, look, I saw it. It was going to 10X. It's all trash, guys. This company's trash. I don't know what else to call it. I'm just trying to be as honest as possible. I didn't understand it before. Definitely don't understand it now. And it's at a 52-week low for a very good reason. And I would not be surprised if I happen to see it at a 52-week low in the very near future as well. For me, I'm staying far, far away from it. Number three, Campbell's Company. Well, guys, this one's kind of like number one. This is Campbell's Soup. This is the company that owns Campbell's Soup. Like, I don't know. It's a staple in everyday life. But here we are at 52-week lows. We'll talk a little bit more about why all these stocks are trading at that in just a second here. But nonetheless, another company just like Procter & Gamble, where you need to take a deep look, Make sure you understand the business. Make sure you understand some of the headwinds that they may potentially be having. More importantly, understand that valuation and understand what the stock is. Does it fit your goal or not? Does it fit your plan or not? Again, if you're looking for high growth, you need to be looking elsewhere. This isn't it. If you're looking for dividend income, a stable stock, a stock that's probably, a company's probably going to be around for a very long time, then this one right here is definitely one to consider. Number 4 is Lululemon. And yes, I want to call it Lululemon because I had no idea what the heck it was called. A lot of the ladies in my group and some of the guys too corrected me in my DMs, told me it's not Lululemon, it's Lululemon. I'm probably still saying it wrong somehow. I don't know. Sorry, guys. It's not a place that I shop at. I've seen them before. They're in the middle of ski resorts. I mean, they're kind of everywhere. So it's not like I'm unfamiliar with the brand. I'm definitely familiar with the brand, but I apologize. I don't know how to pronounce it. Sorry, not a place that I shop at, and I don't know anybody that buys it personally. But when you look at earnings with a stock, you're seeing, obviously, just in general, increased competition in the space as, athletic wear continues to expand and move out. And secondarily, you're seeing that net income actually decline. You're seeing margins getting squeezed. Now, is that temporary? Is that short term? Is it long term? I don't know because I'm not listening to all earnings calls. I personally have no interest in owning this stock, not because it's good or bad, but just simply it's not a stock and a style stock that I want to own and a company that I want to own and a business that I want to own. But nonetheless, those are things that are important. You got to answer that question. Why? What is management's plan for turning around those margins, for turning around that net income? They are growing top line, so it's not like growth is stagnated completely. They're definitely still growing that top line there. But, hey, you can grow the top line all you want, but at some point in time, you got to grow that bottom line, right? That's where profits come from. That right there is what investors want to see in the end. That will continue to push the stock price well into the future. You've got to have that. So that's definitely the question that I ask you guys that are looking to do this. And I definitely would say I would look into. That'd be the first thing I'd answer would be, what is management doing to do that? Is that possible? Do I believe in that management team's vision to do that? And if you believe in that, hey, with top line growth, management buying back shares might very well be an opportunity there to get a stock at a 52-week low. Doesn't mean it can't go lower, guys, right? A stock can make a lot of 52-week lows before it finally turns around. But unlike some of the stocks on this list, like a Mullen, this one absolutely has some things going for it. More importantly, it's just a tangible business. I don't know how to say that. It is just simply a tangible business. So it's definitely one I would consider looking further into. But the next one is not one I would look into at all, and that would be Bingo or Bionano Genomics. It's one of my favorite old style stocks on this channel. It was just part of the stupid, ridiculous hype that was 2021. I was the dumbest investor ever for not buying it because I had this great PowerPoint, no revenue, no nothing else. And it looks like they're still living off that PowerPoint. Not really any revenue, really nothing else going on with this stock. Don't let the reverse stock splits fool you into thinking, oh, it's $3. I mean, I remember when that stock was a penny stock. I mean, literally in the pennies. Now it's up over $3. They must have something going on. No, they've done multiple reverse splits since then. Back in the day when it was trading up over 10 bucks or so, that was right around $8,000 per share today with all the different reverse splits that they've done and everything else of that nature. So they've gone from $8,000 per share all the way down to $3 per share. I'm sorry, this is just not a company I want anything to do with. Unfortunately, it seems like it's still suckering in retail every once in a while to buy into this stock. But hey, it made the list a few months ago. And of course, it's down lower than where it was back then as well. So I'm really glad I was a dumb investor and I didn't invest in a stock because it obviously saved me a lot of money in the end. Not that I get every stock price right or every stock pick right. Excuse me. I don't. Not at all. But this one right here was obvious to see from a mile away, but that's what happens when hype and hopium take over instead of fundamentals. That's why we stick to the fundamentals so much here on this channel. And the last one is consumer staples. Now, just like PG and Campbell's, you can also throw in Heinz, PepsiCo, companies like that, massive companies. We all know the brands. We all know exactly where they're at, and they are all trading at 52-week lows. Now, for a variety of reasons within those different companies, there's a little bit of nuance within each one. But it was just 2 years ago, all these companies were trading at all-time highs and were trading at ridiculously high valuations because money was flowing to safety. And yeah, it made no sense. You're paying an 8 multiple for Meta, but then you're paying a 50 multiple for some of these type stocks. I mean, it was just like upside down world there for a little while. And so this is just part of that upside down world correcting, except for with these type stocks, they're like the Titanic. They move really, really, really slow. Or big cruise ship. I'm not implying any of them are going to hit an iceberg and go under. I'm just implying they're like a cruise ship and they take a long time to turn around. Unlike a Meta that's like a speedboat and can just turn around, rocket up on a dime and move really, really fast. completely different style stocks. And that's why it's taken a few years for a lot of the air to come up out of this. Of course, now we do have the tariff thing going on and a lot of other things of that nature that put businesses like this in a little bit of flux, where typically they're very predictable. And right now they're not very predictable. And a lot of times, when investors feel uncertainty, that's not good for investors, and they start to kind of sell out a little bit. It's probably one of the other reasons why we've seen these trading down low. So again, make sure you understand the companies, make sure you understand the problems, and then make sure you understand the valuation and of course your goals in the end. And if all those sort of things align, and there might very well be an opportunity in the consumer staples space for those that are looking for those safety style stocks, those dividend style stocks to build out that type portfolio. Might very well be some great opportunity there. And if you want to discuss these stocks with me, learn about valuation, how to set those price targets, how to set goals to even know, hey, do I want to own any of these stocks or not? Do they align with any of my sort of goals? How do I do that? How do I align them with those goals? All that stuff like that. Get your free courses, get your free coaching, be a part of the best 6, 7, and 8 figure Discord out there. Jump on our live Q&As, be able to talk to me anytime you want. Guys, there's so much involved in the membership. Check out the pinned comment, see if a membership's right for you, and take advantage of the sale that ends this weekend before the price goes back up. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.